Hi there, and I'm just going to explain a few patterns over the last month. So from the last highs on the US markets around the sort of 20th of February, we were looking for this sort of pattern for here, this five waves down, and we still are. At this stage, currently we've got three waves down like this here. Okay, so what we wanted to see, or still expecting to see, or hope to see, is this pattern here. So currently we've got these three waves pattern here, but we're looking for a basically a fourth wave on here, and then a fifth wave down through here. Now, the situation at the moment, we're in this rally here, and the norm for this particular rally here is a little bit twofold, really, because in each one of these structures coming down through here, we would have five waves. So we would have like an impulse wave as such coming down. Impulse wave is five waves. So we would have five waves within this particular structure here, like this. And normally what happens, we would label this down for one, back for two, and down for three is what we're doing at the moment. And we're looking for wave four to go back up through here. Now, wave four here normally pulls back up to the third, fourth wave of one lesser degree. So it would be that little one there. That's the fourth wave of one lesser degree, this structure in here. Or we could look at it in terms of the Fibonacci relationship here and be looking at a 38.2 retracement level back up to here. So normally it's within there somewhere. So it's normally more important to actually have a look at the structure that comes in for the fourth wave here. And this particular structure that comes in through here, we can get sort of lucky, and it can be a zigzag like this here, an ABC. But normally the fourth waves are a little bit more complicated than that. You'd get that one there, and then you'd get another set of three waves here like this, and then eventually get another five going up through here. So much the same sort of pattern, but it gets a little bit sort of a bit more sort of complicated, but it is sort of important to sort of understand a bit. So where we are now with this situation is that we've had this first leg up here, this first leg going up through here. So we've got that in play. And just remove that, time being. So we've got that little move there. And the reason that I say that we've got this move here is because of its structure. Because in its structure there, we have in here, we have five little waves like that. Now, that's quite clear on the S&P 500 and reasonably clear on the SPY as well. So what we'd be looking for is that we'd be looking for another five waves up through here like that, and would also be looking for three waves back down like that there. So that's where we're looking at. And at the moment, we're right on the top here. We're right there. Okay, so yeah, look, that's what we're sort of looking at now. Into these rallies that we've had have been quite strong, and so what we need to realise is that well, you know, as it goes down from these structures here, why can't this one here, you know, be a three-wave structure? And if that's the case, and it's an A and a B and a C from a bullish market perspective, then the market can go up and make new highs from there. So, and that's a real possibility as well. We always need to have a look at both sides of the market. So essentially that if that was going to be the case, then we would be looking at this move that came down through here in five waves. We wouldn't like that there. So basically this wave four here can't cross over into the price territory of wave one here. Okay, so that's what we're looking at there. So there is that scenario. So once we've got that in mind, that's one of them. The next scenario for the bearish count can also be slightly different from that, and this is the one that is probably likely to sort of be occurring. In this particular structure coming down through here, we could look at this being wave 1 to here, and then we'll be looking at wave 2 to this point here. Then when we're looking at wave 3 coming down into here as such, we could consider this move down through here as also 5 waves as well in regards to a smaller version coming down. So we can be looking at 5 waves down here to make this one here, but this would be wave 1 of a smaller degree. So we would put wave 1 there, and then we'd be looking for wave 2 to come back. So I need to look at these. I know this might be a bit confusing, but I need to have a look at these options here. So in this market, in this thing moving down through here, the 61.8 retracement level back up. Oops, around the other way. I normally just sort of do these by sight, so bear with me there. So that move that's come down here, or in 5 waves down, the move back up here to 61.8% here, that would be also acceptable. But what actually occurs in this scenario is that there would be an ABC back up, and we've got that first 5 waves within here. So that's a possibility. And the reason for this scenario here is that this particular move coming up here would overtake this area here like that. So they're the 2 wave counts, and once that's complete there, then that would fold down from that point of view there. So what that does, this wave count takes us a little bit higher, but we can't rule it out. That's the reality of it, and it's probably likely to be this scenario as well. So then at what point do we say to ourselves, well, this ABC here is actually getting too strong now and it's moving up through here further? At what point are we wrong, and where do we need to take action for this? Well, I think that the S&P 500 is a steady market to look at, and the line in the sand for that would be the 1300. So in looking at the S&P 500 over here on a more of an intraday thing, this is the pattern that we'd be looking at. So over the last day or two, we've got our rally back up through here, and we've got, it appears to be 5 waves moving up through here. Okay, so that's sort of how that looks. So we would assume that we're getting some sort of pullback. I just assumed at the 1265 here, but it can certainly be at the 72 here. And once that's complete here, then we'll get another 5 waves up through here. And this distance here of 5 waves would be added on to here. So I've got it at this sort of trend line through here for this wave 2 here. But in reality, we need to bring in and work with the 1300 here. So I guess what we could say is, we could say that to keeping things simple, that if the 1300 here became support for the S&P 500, then actually, you know, if it does this here, then that's sort of fine here, but would need to see it roll over like that here. But if it got up there and did an A and a B and a C wave there, and then got up there and found support, and it was sitting up there nicely on support, well, then we would seriously need to look at being bullish in the markets, net bullish, I guess, across the market. So we would have to unwind the short positions that we have and start looking at being long there. So I thought that it would have been nice if we've just got this 3-wave pattern in here, and that would have been the end of it here, because this is pretty much the right sort of pulling back distance for the S&P 500 as a wave 4, right? But I've got to the sort of the extreme wave count and turning this into an A and a B and a C wave coming up here for wave 2. And if we're wrong, then it would be a wave 3 up. So it would be up for wave 1, back for wave 2, and up for wave 3. So finding support on the 1300 would be the significance in having all our markets pretty much sort of long at that point. That's as simple as I can explain it. So I think we just really need to allow that to play out. Of course, if the 272 here became resistance here, then we're fine. We've got our short positions in, and away we go. Now, what we did on Friday is we put out about a dozen long trades, and we used the switch to get those trades going, and 12 of those trades have all pushed to the upside, and they will probably continue to push to the upside. Now, they might turn into losses if we've got a sort of a bear market there, but those losses will be very small and controlled. And if we do have that long push out to the upside the time we get up here, well, then we've got 12 trades on the long side that would be correct, and we can look to add to those positions while we unwind the other short positions. So it's a bit of a middle of the road situation, but at the end of the day, we're taking that middle path, and we should be all right on that. So I've spent a bit of time on this just to sort of lay things out as simply as I sort of could. And that's the go, and you'll see this scenario in the Dow Jones. That's the same sort of 5 waves pushing up through there. It's just not as clear, but as you can see, it'll be the same sort of situation. So finding, so as the 1300 on the S&P 500, that would leave the Dow at 12,000 here. It's already sort of at the max here at 11,800 here, because on Friday we're talking, if we got support on here, then would be looking at that bullish side of things a bit more, and that's exactly what I've just been doing. I'm just explaining to you what it is and what it means. But as you can see here, we've had this push up through here. It's searching for support up here. We don't know if it will get it just yet, but it does appear that way. This doesn't seem to be an impulse wave to the downside here, so we'll allow that to play out here. If this goes an A, a B and a C wave through here and then pushes up, then we'll start taking in that 12,000 consideration as a longer term trade to be more bullish on that side up there. And this reflects through to the European markets and also our local market as well. So on the ASX 200, we'd be looking at it like this. We've been looking at this is a larger wave 3 here and coming up for wave 4. And this is how this would play out. It would be the A wave, the B wave, and a C wave, which would take us up to that 650 there. Okay, and the SPY here as well. It appears like the S&P 500. We were first of all we were looking for a 3-wave correction back to the 38.2 level here, or to the 3rd, 4th wave of 1 lesser degree, which was basically in here. And that's kind of where we are at the moment. But it does appear that we've actually got 5 waves up through here. So I would imagine that we would get an A and a B and a C, or at least some sort of movement back down through here. It does appear that we've got a very small 5-wave structure down through here, so we'll see some sort of retest back up to this level and then work down a bit on there as well. So if we do have this 5-wave structure up through here, then yeah, look, we should get an ABC back across here, but then we should also get another push up further up here. So we just need to be a little bit careful about that. So I just think that over the next day and maybe a touch more, we should be able to get a better idea of what's going on. We'll continue to hold those dozen long trades on the switch there long for that as a bit of a hedge there. But we really need to just give this time to play out here with this. but we are expecting it to complete as a wave 4 and then move down for wave 5. But we need to give it time to do that. Now, the futures markets, this is the gold market here, and I just wanted to, sorry, it's the copper market, and if I just bring this sort of back in here a little bit, just so we can have a little bit of a look here. We've got a alternative count here of an ABC, which would be the C wave down to here. So we're also looking for a rally here as well. This is the 61.8 retracement level here. So far, it's a bit like this sort of US markets as well, this rally. We just need to see how it's going to play out. As you can see here, we've got this in this green here, we've got this 3 waves up here. So that can be the ABC correction here for that. Or we're going to get wave 4 in here, and then wave 5 up through here, which should take us to this level here before we start to see a larger ABC correction come back down. So you can see that if we do in copper get this 5 wave structure through here, what that means is that after this is completed here, we will get an A and a B and a C wave, and then we will be pushing higher up through the 450 there. Because if we get 5 waves in a change of direction, so we've been coming down, and if we get 5 waves in that direction, it means that after this 5 waves, this impulse wave has a correction, then we'll get another 5 like this here. So it will take us up through the 450, and what that will do, we'll put our material sector into a buying mode, and it will also put the Australian dollar into a buying mode as well. But at this stage, we've only got 3 waves, yeah? So we need to allow this to play out also. If it was going to be in this little sort of correctional move here, we can see a couple of things here. First of all, I need to point out that if it's going to go to the downside, if it crosses over the 427 here, I put 425 on the early bird there, but basically if this market moves down below this wave 1 or A wave here, then we have a bearish scenario at that point. So we're not that far off that, and that would give us overlapping wave structures. So we'll see how we go with that. The flip side to this is that if this is a wave 3 here, then this would be the A, the B, the C wave to here in 3 waves, and then we would push up. Now, this C wave here can come down a bit further, down to here, but the 430 here is the top of minor group 1, so that would be significant as support. But if it's breached through here, then we would be coming down. So once again, it's sort of splitting hairs, and we just need to be a little bit patient at this point so we can understand the next larger structures that are going to play out and how these will impinge on the local markets that we trade. Okay, so that's that. And oil. Okay, so oil we had across the 100 mark here, we basically had the first high above the level, so we're looking at a corrective pattern. So we were looking at 5 waves coming down, and the 5 waves coming down, we were looking for 3 waves to go back up. Now those up to 61.8%, which is basically on that 103 level there, okay? So in terms of proportion and ratio, it's done its thing, it's doing the right things. And now it will play out. So as an A and a B and a C, that should be a top in there for the B wave. Now, if we're wrong, then we'll turn into a 5 wave structure, just like the copper, and it would be up for wave 1, back for wave 2, and then up for wave 3, and then an A and a B and a C for wave 4 here, and then we would push up for wave 5. Okay, and then that would give us 5 waves to the upside. So that would be interesting. So we'd see further upside from that point of view. However, at this particular point in time, you can see that coming down from this high here down to this low there, there's 5 waves there. Yep. So we've got down for 1, back for 2, down for 3, back for 4, and down for 5. Because we've got 5 waves in the opposite direction, then we'll get 3 waves back up. Yep. And then we'll get another 5 down through to here. Now, this one coming down through here could be wave 4. Yep. And then we push up for wave 5. But if it continues down through the 100 here, more so above, if it takes out the top of this one here, then we'd have overlapping wave structures of waves 1 and wave 4 here, which would be a no-no, breaking an Elliott rule. So then we'd see further downside from this point here. So we could have down for wave 1, back for wave 2, and then coming down for wave 3, 4, and 5 coming down. So once again, we've got that little sort of thing in here. And I'm saying this slowly because if you've got trades on in crude or the energy sector per se, then understanding this particular little A, B, and C here, or a breaking of this and coming into the downside here, would be significant. So to get your timing right and to be on the right side of the market, then this is the little area that we're waiting for here. And you can see that this is going to be probably 1-2 sessions before we get to that sort of point there. Maybe we do it in 1, maybe 2, maybe a touch more, but whatever the case may be, is we need to allow it to play out to a point so we know where we are. Okay. Gold. Essentially, if gold's there's a few things here. It's a little bit the same as the other markets really as well. First of all, this is the supply level. So from this area here and this here, so starting from 420 to 435 up here would be all of this will be tough going for this market that's going up. It's already trended, so markets are trends and corrections, so it will have a correction within here. Yeah, if we're looking for a structure to go up there, then would be looking for the 5 waves to do that, and that would be the 5 waves there as such in this little scenario here. So on Thursday we were looking at we had a bearish count from here, and we were expecting it to come down through here. That wasn't the case, and we pointed out at the time that when a market is sitting above a level like this, you can't go short. In fact, you really need to be on the right side of the price, on the right side of the level. So in this particular case, there's the 1400. You can see it sitting on there nice and squarely, and then it starts to take out these highs through here. So that's your setup to go long at that stage, because support and resistance is more important than the Elliott count, and off we go to the upside there. Now, in the real sort of bigger picture, if the price comes up around the sort of the 140 here, yeah, then that's really taking out the highs over here, not taking them out so much, but really moving into their sort of territory, and then we would expect a much higher move to the upside, unfolding up to the 1500. So you'll see that on our 4-hour wave counts with gold, but at this point in time here for trading it, is that the minor levels here of 14, 10, 20, and 30 is what you're looking at. And as you can see here at the moment, we can see that the 1420 is resistance. It hasn't become support yet, so yeah, you couldn't go long at this point here until it was support. And yeah, so but there is reoccurring patterns here. This particular pattern that's here, yeah, is really the same pattern as this here. And in fact, if you look at this little pattern here or this one here, it's really the same as this bigger one that's we're talking about in there. So they're just reoccurring patterns there. So there's a very good chance for this to go to the upside. But once again, study this one here, study this, and study that at that level, the 410. Yeah. study what happened here, how it came up and hit it, dropped back, tried to get up, eventually gets up there, gets the first high above the level, comes back and retests. That's what you're looking for. This is the classic sort of pattern at a level and then moving off from that point. That's your best bet. That's the timing involved in it. That's when you diminish the risk, trading risk and trading dollars. So at this point here, at this point here, you would be at that point just in there. So this would basically push up through here, then come back and retest it. After that retest, if this becomes support, then you can move in and move up to the 30 and take the money at the 30, as you would do here. You'd take the money at the 20. Sure, there'd be more in it and all the rest of it, but you know, you wouldn't have to sweat it out through all of this. You know, going from one level to the next level is the safe bet. Alrighty, that's about it. So just sort of recapping on the Dow there and the S&P 500, you know the levels, you know the patterns, and we just really need to sit it out. This sort of bullish sort of momentum will probably be there on the Monday for our local market, and maybe even be there on the US market for the opening of the session. But if it lasts, that's the question that we need to well, ask the markets, and the only way you can do that is just by being patient and observing what occurs. So it is a point of observation before we jump either way on all of this. Alrighty, cheers.